Hey everybody, welcome back to Drawbridge Finance. My name is Levi and this is an opinion channel about money. I have to say I'm a little bit nervous today because I have never done a live stream before and I have no idea how this works really. So if there's technical issues, then let me know what's going on, but I'm assuming I'm going to be able to see some comments and people are going to start watching, and then we're going to have a discussion about some topics that people ask questions. That's the whole idea, is that people want to ask me questions real time and I would love to be able to answer those questions. So let's get to it. I mean, hopefully I've got 0 people watching so far. I don't know whether or not I'm even streaming. Hopefully you guys have your notifications on, because if you're a subscriber, I'm going to start doing more regular live streams. Now that I'm doing this very first one, I think it's going to be a great interactive content for my channel, and I think that I'm going to be able to provide people with some information that they may not get in some of my regular videos, because they're going to be specific answers, real time, off the cuff to my viewers. So again, I have no idea whether or not this is even broadcasting. Let me know if you guys are on and watching. Otherwise, I'm just going to keep going. I've got some kind of preamble stuff that I can cover. If anybody hasn't got the notification, maybe I'll share it to Facebook. See if that... see if this garners up some people. We'll just go, if you don't follow me on Facebook, you can always look me up, Levi Woods. I'm going to be creating a Drawbridge Finance Facebook page very soon. So I will put a link down in the description for that future page on Facebook for Drawbridge Finance. And oh look, I've got a couple of people that are watching, which is amazing. So if you are watching, please ask your questions. James has me, that's fantastic. Hi James, welcome. If you have any questions about anything that I'm doing, what I'm investing in right now, what kind of things I'm doing, please ask away, because there's only a couple people here right now. Guys, if anybody's listening right now, can you let me know if my audio level is good? Because I can put on my headphones and actually listen, but I find that super distracting. So I'm going to put them off for now. And if anybody wants me to turn up the volume, please just let me know. What are my thoughts on Wealthsimple? Well, I love Wealthsimple if you have a small account. So this is a question from Noor, and he's asking about Wealthsimple. For anybody that doesn't know, Wealthsimple is an app or a program that you can apply for, and you basically set up a regular interval deposit, and what that does is allow you to invest in ETFs for relatively low fees. And it's fantastic, especially for people that don't have a lot of money. I never had that option when I was young. When I was 16 and I started investing, I actually had to open an account, a trading account. And then when I was 18, I was legally allowed to buy mutual funds, and I had to go to the bank. So when I went to the bank and did that, I was paying huge fees. And that was not great in my opinion. I find mutual funds in general to be relatively high fees, and I would prefer not to pay high fees. I mean, that's the whole thing about investing, is I want my money to work for me, and Wealthsimple allows people to do that. Now, once you have enough money, I think that it's a better strategy to get away from a program like Wealthsimple, because what you're doing is you're investing in ETFs, and you are investing in a diversified way, which is fantastic. But once you have enough money, you can start being specific about where your money is going and what you're investing in. I've done videos on this before, talking about like the mark, like how much money do you need to really start a diversified investing account? And I feel that it's around $10,000. So if you have less than $10,000, a program like Wealthsimple or Robinhood, fantastic. Just do it. Set up your interval payments or your contributions, and get it started, because that is my number one rule of investing, is pay yourself first. And Wealthsimple makes it really easy to do that. Top 5 dividend stocks for Canada. I mean, I just did a video last week on some American stocks that I'm watching. But my top 5 dividend stocks for... Sorry guys, I'm losing the screen here. Bear with me for a second. I'm just going to pull up my portfolio and take a look and tell you what I'm liking about dividend stocks in Canada right now. I'll give you guys a Canadian one and a couple American ones. A couple Canadian and a couple American for top 5. Just give me 1 second. So what am I liking right now? I always love this one, div.to. It is Diversified Royalty Corp. It's paying a dividend right now of 6.56%, and it's a nice little mutual fund company. The stock is at a good valuation right now. $3.23. I would be purchasing more of that right now. So div.to, that's one. That's Canadian. American ones, what am I looking at? I always like this company called Apollo. The ticker is, or the symbol is AINV, and it's Apollo Investment Corporation. It doesn't actually have the yield on here. What else am I buying? On the Canadian market, BK.to, which is Bank Corp. I like that. I've been buying lots of that. There's also a little hospital dividend fund. The hospitals are actually down in Texas, I believe, and the fund is actually traded on the Toronto Stock Exchange, and the ticker for that is DR, as in doctor, so dr.to, and I like that. It's medical facilities. That's always a nice little play, and it's down recently, so it's a good time to get into that. A lot of the stuff that I have, I've had for years, and I just keep on it. Like it's, I'm not adding new positions. I noticed one of the stocks that I looked at the other day, the dividend stocks, was Gamestop. I've been watching that for a while, and it was up quite a bit. It was up like 8% on Friday. So I don't know if that's still in a good buying position or not. We had a huge spike. I didn't even look to see what came out, but I wasn't really watching it that closely. It's got a huge dividend yield, 10%, and the ticker on that is GME on the New York Stock Exchange. Let me just go back to this chat for a second and see what you guys are saying. What's a lot of money? With regards to dividend stocks, I mean, I've done videos on this before about keeping your fees really low. So when you enter a position of a single stock, I very rarely purchase anything less than $1,000 worth of a single stock, which means if I have an account of $10,000, that allows me to buy $1,000 each of 10 different stocks. That is like barely enough diversification, because if we have 2 bad picks in there and that drops, then our portfolio suffers from that. If we have less than $10,000, it makes more sense to be in ETFs, in my opinion, until we get to that 10,000 mark. Now, really, I'm an advocate for constant contribution. So once you get to that $10,000 mark, hopefully you're contributing a couple $100 a month, and it doesn't take very long. So you should be practicing by setting up a portfolio and watching the stocks that you are thinking about buying in the future, so that when you do get to 10,000, you can make a move and feel confident that the things that you're watching are good picks. So the question from Matt is, what is the best way to invest? I'm with CIBC, and they seem to have low trade fees, but is there a better way? I'm with CIBC as well. I bank with CIBC. I do not have a CIBC. I believe it's the Director Investor's Edge, I think is what CIBC has. And I don't actually invest with them specifically, but I believe that most of them have around a $10 fee per trade. So it's fine to do that. I mean, as a dividend investor, I am trying to minimize my fees, and CIBC allows me to do that. If I'm purchasing $1,000 worth of stock of one company and the fee to purchase that is $10, then there's absolutely no problem in doing that. That's 1% of our overall investment is going to fees. So would I use $10 trades on a $100 purchase of stock? Probably not. But on $1,000 or more, CIBC, Investor's Edge, or any of them, RBC Direct Investing, TD Waterhouse. I mean, my very first account was with TD Waterhouse, and that was almost 20 years ago. It was more than 20 years ago. It was 22 years ago now. Okay, so the next question is from El Zorro. Do you find ETFs... Oh, I'm a little frozen here. Sorry, guys. Hang on. Give me 1 second. In your opinion, what is the... So... I don't know what's going on. I can't see any more chat. I can't scroll down. So hopefully this fixes itself in a second. Maybe I'll just refresh this. Do you find ETFs better in the long or medium term? In your opinion, what is that max MER that we should be charged? Well, I personally don't believe that we should be paying a very high MER at all. And for those of you who don't know, MER is the management expense ratio. What management expense ratio is a percentage of how much of the value of our account goes to our personal investor, whoever is actually holding the mutual funds. And, I feel like mutual funds are dinosaurs in this day and age. We have ETFs that charge like a 0.04% MER, and then we've got mutual funds at a bank that charge like a 2.8% MER. And they're virtually working in the same way. We have computers that are making the trades, and they're determining how much of a percentage is going to the different investments within the set portfolio. So for something that has, in my mind, not a lot of human management, it's really being driven by a computer. I find it ridiculous that anybody would want to pay 2.5% or 3%. I mean, I've seen up to like 3.86% MER, which is ridiculous. On a $100,000 account, you would be paying $3,800 a year on a 3.8% MER. Why would you do that when you can buy into an ETF that's charging like a 0.5%? So you would have a $100,000 account that's charging you $500 a year in fees. That would make way more sense to me. Yeah, I am still completely frozen. Okay, here we go. Nora says, thank you. You're very welcome. James says, just signed up with an RBC e-advisor for 6 months, then a 0.5% fee after that, mostly invested in ETFs. James, I think that's awesome. I mean, I would do that if I had a small account and I wasn't interested in dividend investing into specific products or into specific companies. It's been a long time for me since I've purchased things like mutual funds or ETFs. I do have one. I think I bought the very first AI-driven ETF, which is Mind.to. I bought it last year, and I've had like a 6% return in the last 6 or 7 months since it came out. So that's okay. But, there's other stocks in my portfolio that have done better than that in this time frame. And there's definitely stocks that have done worse than that in this time. Steven asks, can you trade from Canada in strictly US dollars so you don't have the bank transferring back and forth all the time? I lost some money in exchange rates on my trade. Yeah, I mean, foreign exchange is definitely something that costs money. I have the same problem. I have an account that lets me hold US dollars or Canadian dollars in it, and I typically tend to trade mostly options for my US dollars. And so as my option income grows, I use that to purchase US stocks. And the dividends that I make off my Canadian stocks, I use those dividends to reinvest back into other Canadian ones. So I try to not transfer the money back and forth between the two currencies. And that's yeah, it's something we just have to watch out for. It starts eating into us if we pay too much on exchange of constant back and forth. So James says, next one is set up direct investing with RBC, $10 a trade. Not great, I know, but a start. Where are your thoughts? James, I think $10 a trade is pretty much what we're getting in Canada. I mean, anywhere that I've looked, there's some that are like $6 a trade, but then there's other little things that they nickel and dime you with. And so $10 a trade is great, as long as you're making a purchase of at least $1,000. Also, you have a list of books that you recommend. Top choice. This is from Mateo. I hope I'm saying your name right. I'm sorry if I'm not. List of books. Well, it's interesting because I grew up on books and now I very rarely read them because I read everything online. So I look at the Yahoo news stream more than anything, but it depends on what you're going for. If you're looking at getting into options trading, that book, Getting Started in Options, is an okay place to start. There's definitely better websites out there. I know one of them I came across recently is called the Options Playbook. I had just briefly went over their website and I was like, wow, this is got some great information that is really easy to understand. And I know that I've been trading options now for a long time, so it might be easy for me to understand because I've been doing it for a while. But if you're looking to get into options, if you can find a cheap copy of Getting Started in Options, I think that is a really great resource to get you going and thinking about things. It's not the be all end all, that's for sure. Obviously, like The Millionaire Next Door was great. It just talks about regular people like myself who are making money and building their income and being smart about their money. And that's really the type of investor that I want to be, is being smart and making my money, my contributions automatic, and keeping my fees low and not overspending. I'm not trying to go out on yachts every weekend and spending too much. So Millionaire Next Door is a great read. The Wealthy Barber, also great read, just for regular people and how to make money. Are you still exposed to FTN? Yeah, you know what? It's terrible. I don't even know. I'm so bad because I don't actually look at my dividend stocks all that much. I'm mostly an option trader day to day. And so unless some huge announcement comes out, let me just look at my portfolio here for a second. But the question is about whether I'm still exposed to FTN. And no, I have no positions currently in FTN. Now it's trading at $10.13. I know they have some sort of renewal date that's coming up later this year. And that is going to affect it, but it pays its dividend. It pays out 12.6 cents every month. But I don't think it's going to do much. We're going to see it slowly decrease right down to the $10 mark in November, I believe, is when the contract renews. So hopefully that answers your question. Stefan, thanks for going live. You're welcome. I hope that I'm doing well and not stumbling a ton. I know when I do my videos at home, I often cut out all the parts where I'm saying and so, and hopefully we can get through that and make it a little bit better. For long-term investment, how many stocks do you believe you should invest in? Is having too many stocks dilute your potential earnings? So this is from El Zorro. I think that if you over diversify, you're going to end up paying too much in fees. So when we talk about diversification, we know that the stock market on the whole kind of goes up and up and up around just over 10% a year. So we can see that growth. We can see that growth rather. If we buy into the S&P 500, we're literally buying into 500 companies. So is that too much diversification? I mean, obviously some of those companies are going to go down and some of them are going to do really well, and overall we're going to see growth. So I don't really think there's a time to say I'm over diversified. If you really want to research each stock and make sure you're in the right positions, then that is where you start to dilute yourself, because there's no way that any one person can track hundreds of stocks and watch all the news on all of those stocks. So for my personal watch list, I think I have around 140 stocks in my watch list. I option trade on about 25 of those, and I hold about 35 dividend paying stocks. And the reason that I do that is because I like to keep around 3% of my net worth in each of those stocks. So I have about 30 stocks that I have around 3%, somewhere in the 2 to 5% of my total net worth in each of the dividend stocks. Then I have about 10% of my portfolio in growth stocks. And as you guys know, for those of you who've been watching, like I just bought some more Google the other day. I own quite a lot of Amazon. I'm not trading Netflix. I always trade Apple options. I don't ever buy the stock, but I kind of wish I had. It's just, it keeps going up, and I know they have really good income streams. So looking at growth stocks, I still like Apple, Amazon, and Google just because of the way their revenue is set up. They are companies that make a lot of income, and I want to make income, so the companies that I invest in should be making income all the time. In Netflix, I'm concerned about the valuation is really, really high. And Facebook, you know what? I just never really bought into the Facebook thing. I know they have a lot of ad revenue as well, and I don't follow it at all. So I kind of, it's the one that I never read the news on. I can't really comment on Facebook, but growth wise, I'm still looking at those. I also am still pretty bullish on Square, which is SQ, for growth stocks. So I have a small percentage of my portfolio in Square, Amazon, Google, and then option plays obviously on Apple, which is an easy option to play. Do you diversify in currencies as well, meant by buying stocks in other currencies? This is for BR investing. I personally only buy in Canada and the US stock markets. So I only have currencies in American dollars and Canadian dollars. And I would say that my portfolio is pretty split. I have about 50% in both, which means that when the dollar goes down, like our Canadian dollar is quite down as of yesterday. I didn't look today, but it hurts. It hurts, but because I'm only 50% of my portfolio, then the bump in the American helps. So I actually don't feel a lot of currency exchange because I have both. Question from El Zoro, are ETFs better for medium-term investment, 5 to 10 years, or long-term 20 plus years? Well, I think that ETFs are a very good investment strategy comparatively to mutual funds. The problem with ETFs is you can't be very specific about them. So one of the things that inevitably, if you want to be trading all the time or involved in your investments and interested in it, then ETFs will get very boring. So you can hold them and have a portion of your account in ETFs. That's great, but you can't do much with them. They're just kind of there. So I do like to buy things that are, I can choose when to buy it and choose when to sell it. And I know when the dividend's coming out, and I know if the company has a good year. Like say we're investing in a REIT and they sell some property and make a good deal of income off selling that property, then they usually bump that down to their shareholders. And that's the kind of thing that's really nice as a dividend investor, is that like those extra dividend payouts comparatively to an ETF, which is all just kind of gets muddled together, and you make money over time, hopefully, but there's always like the dogs at the bottom of the portfolio that aren't performing very well, and they drag down the top performers. Do you, from BR Investing, do you use Seeking Alpha as an information source? Yes, I have the Seeking Alpha app on my phone. I use it occasionally. Um, Lately, I've been using just Yahoo Finance. I mean, I love Yahoo Finance. There's so many articles on it, and it's you really have to dig a lot because there's so many people that write articles, and they're totally putting their opinion out. And so interesting, the other day I was looking at I think it was Motley Fool. It was like literally 4 articles in a row that all happened to be on the same stock, the same dividend stock that I'm trading. And so in order, they had 2 different writers doing these 4 articles. And so like a month ago, they had one writer say, oh, this stock is a dog, it's going down, I'm totally bearish position. A week later, the other writer releases an article saying, oh, well, this stock is going up, it's so great, I'm totally bullish. A week after that, the first writer releases another article, same on Motley Fool. I think it was Motley Fool. Anyways, they were bearish again. So you've got the one writer that's bearish, and he's written 2 articles. And in between, you've got a writer that's writing a bullish article. And then the subsequent week, all of a sudden, you've got another bullish article. So these guys are like tag teaming 2 writers, one with a bearish opinion, one with a bullish opinion, and both bringing data into the article to show that their viewpoint is the correct viewpoint. And so you kind of have to laugh a little bit about that kind of article because they're just writing it to get paid, and we have to delve into the numbers. You have to go and look at the actual numbers inside of the company that you're trying to invest in. So do I use Seeking Alpha? Yes, but I don't use it all the time. Steven says, I deal with Scotia iTrade, and it seems to always have a delay in market updates. Do you have to call and ask for real-time market prices? Thanks. You know what? Lots of the Canadian trades, I haven't dealt with interactive brokers, but most of the low-fee accounts have a delay in Canada. So I use virtual brokers. There's definitely a delay. I feel like it's about 15 minutes. And I always use Yahoo Finance for my real-time market prices. So that if I am making a trade on virtual brokers and I pull it up and it says that the stock is $12.50, Yahoo Finance could tell me that it's at $12.47 or at $12.53, and it's a lot more accurate. So I always have the real-time streaming on Yahoo Finance. And I've done a bunch of videos on that if you guys are interested in how I set up my portfolio. Because I use that to track both my dividend stocks and my options trades. And my option trades are a lot more specific. I need to track them more real time. Elzaro, do you have a website for a regular guy to understand stock charts and info, beta, P&E, dividend yield? There is so much info that at times it feels overwhelming to make a decision. I do not personally have a website on that. I have chosen to concentrate on doing YouTube videos, and I think that this live interaction is going to be a regular component now that we've got it up and going. You guys seem to be watching and enjoying, so that's good. The Investopedia is probably the website that I go to the most if I'm trying to look up a definition for something. So if I'm trying to figure out how to use the beta, which is a derivative, to read into the stock price, or how to use a PE ratio or the PEG and how they correlate to one another. But all of that understanding kind of comes with time. I think if you're starting investing, I always advocate that you go and find a broker that will charge you a little bit more, but will get you into some positions that you don't have to worry about so much, and then hold those positions. And while you're holding them and while you're working and making money and putting that money aside, that's when you spend that time to start learning about those ratios and start watching stocks. I mean, I've been trading 22 years, and I sometimes I can trade without even looking at the stock. I'll look at a couple of things and I'll open a position based on a really, really shallow slope of a 200-day moving average, or just the position of where the stock price is in the 52-week range, depending on what I'm looking for. Stefan asks, you should do a series on option trading and how you option trade. I have done a couple of videos on option trading. In fact, I recorded one yesterday. I haven't released it. I'll probably try to get to that today after I finish this live stream, talking about how I am an option seller. And really, the book that we talked about earlier, the Getting Started in Options, the whole book is geared, it's a little bit weird. They don't talk about fees, which is a huge part of option trading because they're super expensive to trade. And they often talk in terms of buying as a strategy. And for options, I am definitely an option seller. And the reason that I'm an option seller is because I know that we have time decay that works for us with option trading. What that means is that when I sell an option first, before I've purchased it, and I'm short that in my account, then as time goes by, the time value decreases. And if the stock price doesn't move at all, if it stays the same distance from whatever my option strike price is, then over time, the time value decays. And that's where I can make money, is always in time value. Now, of course, you can play a neutral strategy. So you could position yourself so that you want the stock to stay the same, or you can position yourself in a way that you want the stock to go up or the stock to go down. And that's kind of the beauty about options, is we're basically creating a target range for where we think the stock is going. And there's lots of information. There's so much information on the web about stuff. And option trading is quite complex in all of the different scenarios that you can set up. But in reality, my option trading strategy is actually quite simple. I would use the selling of a put option to enter a trade. Say I wanted to buy a stock like Coca-Cola and it's trading at $44. If I decided that I wanted to buy that stock, but I thought it was overvalued and I wanted to buy it at $42, I could sell a put position. I could collect money right away. And if the stock drops below 42, I would be forced to buy that stock for $42. So it's kind of like getting your cake and eating it too. I'm getting a little payment right off the top. I'm getting money injected into my account. And then when the Coca-Cola stock drops down below 42, I get to buy it at 42 instead of buying it at $44. So I love that, like selling a put to get into a stock that you want to buy positions in. And of course, one options contract is 100 shares. So you have to be willing to buy enough stock. If I'm going to be buying 100 shares of Coca-Cola at $42, it's a $4,200 investment. It's not small change. So you do have to have a little bit of money to get into option trading. I do very little trading on a $10,000 account that I have. I literally have like one option position that I play. But on my bigger accounts, I trade options, like one options contract for every 10,000 that I have. So if you have like a $80,000 account or $100,000 account, then you can have 8 to 10 options positions open and kind of roll those every month and increase your income. So let me just scroll up here. So that was talking about option trading. NBA Insider says, what are your top 5 dividend stocks and 5 growth stocks? I think I've already talked about this, NBA Insider. So you can go back. I've got the DVR setting on, so you can go back and watch this again, but I've already covered a couple of those. And welcome. I know you send lots of comments, so thank you. El Zorro, are you going to open an investment firm soon? Because I would invest with you. No, that is not the plan. I have thought many times about going to work for a brokerage and being an investor for people. And I don't think that that's in the cards for me. I work as a prop builder, for those of you who don't know, and I have a props building channel on YouTube as well. And I quite love my career, but I'm hoping that I will be able to continue this YouTube thing and make sure all of the conversation that we have with investments is relatively inexpensive for people. I am going to start a Patreon account very soon, which is going to be great because I think it'll allow people to give me a little bit of income, because I don't make almost anything off of YouTube. It's kind of terrible how sad that is. Google makes a lot of money off of us, but we as contributors don't make a lot of money off of this type of thing. But I have a lot of people that are always asking for specifics, and I feel that the information that I'll be providing on those specific things, like options trades that I'm doing, I've been toying with that idea of like exactly putting in, oh, this is the stock I'm buying, this is the price I bought it at, and letting my Patreon subscribers have that information. So that is something that I am going to be setting up in the future, but I haven't done it yet. But I don't think that I'm going to be opening a brokerage or an investment firm or even working for one anytime in the future. But I will let you guys all know if I do decide to do that. Do you own precious metal stocks or bullion itself, gold and silver? Is it a good investment to have? I did a video on this just recently, actually, about why I don't invest in gold. And gold is a good investment if you want to make like a 2% return. I mean, historically, that's what it makes. So if you feel that a 2% return is good, which is less than inflation. I mean, inflation right now in the US is 2.4%, and in Canada is 2.2% this month. And I would rather invest in something that has a little better return overall. So no, I don't buy gold or silver. I don't have it buried in my backyard. I'm not one of those people. I'm not worried about the world ending in that way. Thanks for tuning in, Steven. See you later. BR Investing. One of the stocks I'm tracking is ETP. It's a risky dividend play as they have a yield of 12%. This company was heavily invested in pipelines, and they are getting lines online more and more. ETP. Wow. Well, this is exactly what I love. Let's talk about something. So I'm going to pull up ETP. Everybody should look at it. Energy Transfer Partners is on the New York Stock Exchange. I've never heard of this company at all. It's down 3% on Friday, 1849. I'm just going to pull up the chart and take a look at it quickly while you guys bear with me for a second. So we're on a pretty downward slope. The 200-day moving average is like a slopey line down. The 50-day moving average is also pretty well a straight line. And we've seen a couple of increases in the last couple months just prior to the dividend coming out, which means people are using this. They're buying, collecting the dividend, and then dumping out of it. I am going to take a look at this company, but my first glance at the chart is that they are not doing all that well. They were doing well. They were a $45 share, and they've been on kind of a slow decline. So unless they've really changed their business practices, I can't imagine that I would be getting into that one. That was Energy Transfer Partners. But I will take a look at it. Thank you very much. I appreciate when people bring up stuff that's new. And a dividend yield of 12% is high, but it's not unreasonably high. I think that the stock would drop considerably if they cut their dividend. But it's nice to collect a 12% dividend, and it makes up for some of the losses that you might see overall in the stock price performance. So Derek Hurst says, just discovered your channel about 10 days ago. Quite liking your approach, doing my historical viewing, catching up. Oh, that's awesome, Derek. Thank you so much. Welcome to the channel. Make sure you check out my 14 rules of investing. That is, if for anybody that's new to my channel, if you're just watching, if this is the first video that you're watching, my 14 rules of investing are absolutely the book that I live by. It took me a long time to write those rules down because I discovered that after a lot of investing over many, many years, there was very specific things that I was doing, and I just wanted to write them down. I was like, what would I say? Like, how do I define the type of investing that I do? And those, if you only watched one video on my channel, I hope it would be the 14 rules of investing. I'll put the link down in the description for that because I think it's super important. El Zorro, my portfolio recommends I hold 30% in bonds. Are bank or government bonds better? How bonds? I'm not really a bond trader. Historically, what happens with bonds is that when the stock market goes down, bonds go up. But over the long term, bonds don't really pay all of that much money consistently year over year when we look at the annual returns. So I know that there's some people that use a ratio of a 100 ratio. I don't even know what the term is for it, so excuse my ignorance on it. But they basically say if you look at your age, that's how many. The correlation between 100 should be how much percentage-wise you hold in your portfolio. So if you were a 30-year-old, you would have 30% in your in bonds, and if you were 70 years old, you would hold 70% in bonds. The theory behind that is that the bonds are going to be more stable if there's a serious market correction. I can tell you right now that my mom and I do a lot of investing, and I oversee her account. She's 60 something, 62. Sorry, Mom, I don't remember. But she definitely does not have 64% of her portfolio in bonds. That it's just, for me, I want to make sure that she's making the most money possible. So if she's in high dividend yield stocks and she doesn't need the money this year or next year, she's going to keep reaping the reward or the benefit of having that like 6%, 7%, or 8% return every year on the dividends. And having year over year over year of that dividend is greater than what people assume the market is going to do, which is most people assume the market's going to return or their portfolio is going to return 5%. And the reason they get that is because we take the 10% actual return, we adjust that for inflation, we end up with around 7.8% return. And then we take into account the mutual fund fees that a lot of people get charged. So they're paying like a 2.8% MER, which we talked about earlier. And all of a sudden we're left with this number of 5%. And so this is what banks tell you you're going to get, is 5% return. And for me, that is super untrue. I've been year over year over year doing really boring dividend investing and making a 13% return because the dividend stocks themselves are paying out a dividend of somewhere in the 7 to 10% range. 6 to 10 is kind of the range I like to aim for. And I love to have my yield in that 7 to 8% range over the whole year. And then we see growth on some of those on the actual underlines. The stock price actually goes up. So we've got the cash injection from the dividends, and then we have the stock price valuation increasing. So the people that will tell you that you want 30% in bonds or 70% in bonds are the ones that are also telling you you're only going to get a 5% return. So looking at the bond market that was returning like a 2.5% or 3% return year over year doesn't seem that far off. But for me, I'm making a 13% return or 10% return, averaging every single year. It doesn't seem very smart for me to invest a whole bunch in bonds. So I doubt that I'm going to be a bond investor anytime soon, and I would stay away from that. In our bank or government bonds better? Both are good. They're both backed by either financial industry that have a lot of money or the government, which basically creates a lot of fake money. There's arguments to either side of that. I can't really give my opinion on whether or not bank or government bonds are better, especially since I don't trade them. BR Investing says, so cash flow, scrolled, I couldn't see. Sorry, cash flow is getting better and better. You didn't like it in one of your videos. One of the stocks is ETF. That was talking about ETF. I can't recall. Maybe it came up on one of my watch lists. Like I did a video on like dividend screening. Sorry, BR Investor. I'm just trying to think about where I would have seen this energy transfer partners that you mentioned, ETP. And I know I did a video on dividend screenings for Yahoo portfolios. And so sometimes there's 200 companies that come up, and I will do the same assessment that I just did with it. Is I will like look at it and be like, okay, what do I think? And really one of the things I'm looking for is the dividend yield high. Great, that's awesome. Then is the dividend payout ratio low enough? So that would be the second thing. It might be paying out more money than it's making, and if that's the case, even if its dividend yield is 12%, it's not sustainable. And then the next thing I would look at is the chart, and I would look at that slope downwards, and I might just write it off before even looking at any information into any detail. Stefan Lord, I used the same option strategy just as you explained in the Coke example. Thank you for confirming my theories. Yeah, so we were talking about the options and the selling of the put in order to get into new positions. The other strategy that a lot of new option traders get into is selling a call. So what you would do is you would actually purchase the stock. So you would purchase stock in Coca-Cola for $44 a share, and then you would sell a call against that. And it's called selling a covered call. And you would set a strike price at like $46. You would collect a little bit of income from that. And then if the Coke shares never broke that 46 mark, you would continue to hold your $44 Coke shares, whatever you purchased them for, as long as the value stayed under 46. And if they went above 46, then somebody would purchase them from you for $46. So you would have made the $2 difference, and you would have gotten this little bonus by collecting the premium that you were originally sold on the covered call. I have bad luck with covered calls, especially in this bull market. If we were in a more neutral market, then covered calls would be an option that I trade more often. But I usually try to sell naked puts. So that's when I'm selling the position and wanting the price of the stock to stay above my strike price. Or I would sell what's called a strangle, which is I sell a put for the low value and I also sell a call for the high value. And I basically want the stock to stay in that range. The beautiful thing about that kind of strategy with options, selling a strangle, is if the stock actually goes up and passes the call, which it does quite often in a bull market, or if you've put your goalpost kind of too low to it, as that stock breaches out, it actually just destroys the price of this put. And you can buy the put out for a really, really small amount and then strangle it by moving the put position up closer to the call and collecting even more premium. So rather than playing covered calls, I often am putting on this strangle position for option play. So I'm putting on a sold call for my high value and my sold put for my low value. And I try to do that on a 45-day interval so that I'm have 45 days for that time decay to take place. And the stock shouldn't move too much in 45 days. And then we'll re-put on the positions in the next cycle. So constantly doing like month after month, just trying to create income, regular income off of an options play. Derek says, I'm an escape from the film biz, left 15 years ago after being an AD for 15. Now craft beer. Derek, where are you? I want to come hang out with you for a bit. I've been in film now for 16 years. God, has it been that long? I can't believe it. And I love beer. So let me know and I will come have a pint with you and we can talk about investing. Ivanhoe says, any good books? We talked about it earlier. I love The Millionaire Next Door and The Wealthy Barber. But honestly, online, just go online. If you guys are interested in options trading, check out the Options Playbook, or Tasty Trade is awesome for getting started in options. Ivan says, thinking about buying the little book of big dividends. I'm not familiar with that. I'm really sorry. I will check it out. I mean, I don't think that reading a book is ever going to hurt your investment knowledge. I recently picked up a book that somebody left in like one of those free book things. It was like on reading stock charts, and it was written in the 70s. It was awesome. It's like reading stock charts from the 70s hasn't changed at all. Like, it doesn't matter that the book is almost 50 years old. The stock charts are still the same, and really great info. I kind of flipped through it. I mean, I tend to do that. I tend to kind of speed read lots of financial books because a lot of financial books are written in a way where there's only like one idea in them anyways. So you can kind of glean that information from the back of the book and figure out like which chapter you should read and then go and read that one chapter. And that's oftentimes how I will look at financial books, especially if I'm at an airport, I'm flying somewhere, I will always go and like look up a book. Like Tony Robbins books are unreal. Like that man is worth millions of dollars. He's a motivational speaker, and then he writes these books and like doesn't even take any profit for it. All of the profit from the books go to charities, and the books are brilliant. They've got like brilliant information about investing. Anything by Tony Robbins, amazing. I should put some more links to Tony Robbins books because they're great. NBA Insider says, final question. If I never invested in my TFSA and turned 18 in July of 2014, does that mean I could put up to $32,000 in my TFSA without going over my contribution limit and being taxed as a penalty? So TFSA started in 2009. And if you turned 18 in 2014, then you have 14, 15, 16, 17, 18. So you have 5 years times 5,500. I don't know if any of those years were, let me just look it up here quickly. I don't know if any of those years were large years, if you could put in $10,000 or not. Just trying to look up contributions. Bear with me 1 second. 2014. So 2015, you could have put in $10,000. So you would have been, if you were 18 in 2014, just grabbing my calculator here because I like that. 5,500 times 4 years is 22,000 plus 10,000. Yes, 32,000. That is correct. So the TFSA is awesome for Canadians. For any of you that are thinking about contributing to your TFSA, you should definitely watch the video Maximize Return of $10,000 because I talk about how to use an RSP contribution and then take the rebate that you get from your income tax, put it into the TFSA, and then maximize your return and get more money. It was quite interesting when I did that, how much more money you can make by using the RSP and the TFSA together. NBA Insider says, thank you for the work. As a fellow Canadian, I've learned a lot from you and generally gained my utmost respect. Well, thank you very much. I appreciate all of you guys. Like, you're what makes me do this every day. I wake up every morning and, like, while I'm trading options, I go through slowly because sometimes it's a little bit boring to be going through my portfolio every morning, and I go through my comments and I love it when people are appreciate what I'm doing. I thank you very much, everyone out there that's able to make this work for me. It's been pretty great. So Ivanhoe says, El Zorro, in your opinion, do you think the Canadian weed stock bubble is going to burst? It seems overvalued. Absolutely. Yes. I made a little bit of money off weed stocks. And like, what are we talking about, this bubble? Like, when did it even start? I mean, we were talking about weed stocks. I was buying some in 2012 and I was like losing money. It was like the fastest $1,000 I had ever lost was on weed stocks. And it's basically like playing roulette. It's like you've got all these people that are like all producers and they're all trying to get the licensing and they're trying to figure out how to make $1 and nobody knows what it's going to sell for. Nobody knows when they're going to start making sales. I don't even know if the companies know how much it's going to cost them. They're just like pumping money into it. I believe that almost all of the stocks are overvalued. I know I follow Canopy Growth a little bit, and I bought in when they were like $18 and then sold when they were 21, and then they were down and I bought at 20 and got out at 27, and now they're like at $38, and I just shake my head. And people ask me about weed all the time, and I always say the same thing. When the weed companies start putting up buildings downtown Vancouver, like the bank companies, then I will start buying weed stocks. But they're not in the forefront of my mind. I personally don't use the product. I actually have very few people that I even know that smoke weed or want to eat weed and have that. So I don't know where all of a sudden that people think that there's so much market valuation, that there's going to be suddenly millions of Canadians buying weed everywhere. And I'm probably totally starting an online fight by saying that, but I don't believe that there's valuation at the current levels for most of those weed companies. And I believe that they will all be going down sooner rather than later. Ivanhoe says, didn't bonds do poorly in 2008? Again, I don't know. I don't track the bond market very much. 2008 was, it was kind of the start of the crash too. Like you really have to look at what happened, because it was a long time. Like it wasn't just like one day in October. It's just like the market crash. That large crash that happened between 2008 took like 9 months to go down to its bottom. So it was mostly occurring in 2009. And that's where I would look at the correlation. Like, did the bonds do really well in 2009? Stefan says, do you think there's a crash coming this soon? Well, do I think there's a crash coming? Well, are we going to see a correction as big as 2008? Probably not. I believe that we're going to see some correction for sure. What companies it's going to be in, I don't know. Companies like Netflix, you would think we're going to see some sort of correction. Generally speaking, like oil was down $1.50 on Friday. It's at $68. I mean, we're not in a crazy situation right now. There's the world global economy is quite good. Everybody is making a lot of money. I heard recently somebody used the term Goldilocks economy, which I thought was quite great. It's just got the right mix of things going on. We've got good economic growth globally, and it's a good position to be in. So yes, we are going to see a correction for sure, because that's inevitable. Are we going to see it in 2018? I'm starting to doubt it. Or is it going to be slow? Is it going to be huge? I don't know. Usually when we see corrections, they happen relatively quickly, which is why most of my portfolio is in dividend stocks. We know historically that dividend stocks do not go down as far as growth stocks. So the valuation is held because of the fact that they're paying a dividend. So I look for companies that make a regular income all the time, and then they pay that out to their shareholders. So if a crash comes, I will be looking at it as a buying opportunity, just like I did in 2008 and 2009, and I will be purchasing more stocks at a lower value. My dividend payout will probably reduce a little bit, but it's not going to be killed. When in 2008, I believe that my stock portfolio dropped around 50%, like 45, 50% overall, the valuation, but I didn't sell anything. And I had all dividend stocks at that time. So because I didn't sell anything, it took 2 years to recover back to the previous levels. So I lost 50%, and then it went up 100% back to the levels that I was at previously. And so I had zero growth for that 2-year period. But my dividend payouts actually didn't decrease. I was making like a 11% dividend payout, and it dropped down to 8%. And then by the end of that 2 years, it was still around 8%. So, and that was of the 8% calculated on the previous value. So my actual payments per month at that time, I wasn't making a huge amount of money. I was probably making like $400 or $500 a month in dividend payouts. And it dropped down. If I was making 500, those dividends dropped down to like 400. I've looked at this a few times. I had a 16% decrease in dividend payout. So for every $1,000 that I was getting paid out prior to the last correction, I was then getting $840 instead. And then that 6 months after the first major correction, I was back up to 100% dividend payout. So it recovered. My payout recovered much more quickly than the stock valuation. BR Investing says, do you invest monthly, quarterly, as well as half a year or full year dividend payments? I own Aegon, and they have a 5% yield, but pay twice a year. Their numbers are great though. You know what? I'm limited with the brokerage that I use for my dividend payouts, what I can purchase monthly. So I have drips registered for 10 of the stocks that I own, of about 30 that I own. 10 of them automatically reinvest, and those are always the monthly ones because I don't want to pay the fee if I'm going to be reinvesting monthly. Then I reinvest money as quickly as I can. Because my fees are around $10 a trade, I always invest when I have $1,000 cash in that account. So that's a hard question for me to answer because my portfolio is pretty big and I make a lot of dividends. So because of that, I am able to purchase pretty regularly. I would say that I'm contributing or repurchasing at least once per month. Usually twice per month, I'm buying new dividend stocks, and I'm almost always buying in new positions into stocks that I already own. I did do a video on this, on how I have a spreadsheet that's set up, and it actually shows me which stocks that I own are a small percentage of my overall net worth, and those are the ones that I will automatically rebuy, just to bring my percentage up so that I have around that 3% of my total net worth in each of those dividend paying stocks. Derek says, sorry, skipping one. BR Investing says, was a video on dividend screening. You checked it out and said, oh no, and backed out. I commented on things look better than Yahoo shows. You know what, BR Investing, thanks for that. That is probably really true. There are some stocks that I look at that I own and have owned for a long time, and I look at them on Yahoo Finance, and I'm like, wow, the metrics look terrible, but they're great stocks. They pay, and I've looked into the companies, and I've read the quarterly reports and the annual reports, and they're great. Derek says, Penticton, BC, Bad Tattoo Brewing. Come on down. Well, hey, Derek, you are on. I am definitely coming to see you the next time I'm up in the Okanagan. I'm from Kelowna, so that's a short drive from my hometown. BR Investing says, last comment is on ETP again. Been reading up on them, and people are very bullish. Okay, this is like good information, and I love to look at this kind of stuff. I'm gonna look a little bit more. Thank you for being so pushy about it, because I appreciate that. That's one of the reasons I have a YouTube channel, is because I want people to get into investing. I don't even care if you're investing in ETFs or if you want to pay high fees and invest in a mutual fund at the bank. Just do something. Put your money somewhere where it can grow. Don't bury it in the backyard, and don't hold it in a savings account. And definitely don't go to a bank and put it into a TFSA that returns 1% or 0.5%, or don't buy a GIC. That's it's so silly. Let's grow our money, and then you can afford to lose some when the correction comes, because you'll have more. Elzora, TFSA 2015 was $10,000. Yes, we went over that. Thank you very, very much. Thanks for the info. It's straight and to the point. My work colleague recommended you when I was desperate to find a good info source. Well, thank you. That's awesome. I'm glad you guys are talking about work. That is exactly what I want you guys to do. If you are enjoying my content, please get out there and tell other people, because I just want to talk about money, and let's everybody get rich together, because we can. It's easy, and I can't stand when people can't afford to do things because they made money, but they didn't put aside some of it for their future self. So please share my content. I would love it if we had more subscribers and more people getting rich and sharing this information, because this is so great. This ETP, Energy Transfer Partners, might be an amazing stock for us to all own and make a bunch of money when it goes up and paying this 12% dividend yield. Ryan says, is Enbridge a healthy company to purchase? I can't really speak on this very specifically, but I did read an article the other day about Enbridge. I would have to revisit that. Those companies in that field tend to make a lot of money. So is it healthy? I'd have to look at the balance sheet to actually see. BR Investing, what percentage do you keep in cash if a correction crash does come? I don't keep a lot. I sometimes think about that. I think, I should keep more. I know I have friends that have 60% of their portfolio in cash, but I just look at that what if the crash doesn't come? 2 years ago, there was Mark Zuckerberg on the front cover of Canadian Money magazine, and talking about the tech bubble bursting. And if I had taken that article at face value and taken 50% of my portfolio in cash or 60% in cash and waited for that correction to come and then try to purchase, I would be out a lot of money. In that time, I have all of my money, or most of it, has been working towards making more money, whether that's dividends or option trades. So I very rarely have more than 1% of my total value of my portfolio in cash in any of my accounts. And I don't have many, but always less than 1%. Alzoro says, would it be possible to get your opinion, the percentage you should invest your money in different types of stocks, dividend stocks, growth, income stocks, etc.? Well, I've said this before. One of my personal rules of investing is invest primarily in dividend paying stocks. That's rule number 3. And when So primarily, I mean, that's my personal rule. So for me, I keep about 90% of my portfolio in dividend paying stocks. And those are almost all high yield dividend stocks. Then I have a very small short list of growth stocks that I'm buying. Berkshire Hathaway is one. I mean, they're technically like a mutual fund, but it's a good growth stock. They make a lot of money. And Apple, Amazon, sorry, not Apple. Apple I trade options on. Amazon, Square, and Google. So those are kind of like my 4 growth stocks that I have, and that is 8 or 9% of my total net worth. That's for me. I mean, some people might want to have more. I mean, this last year I probably would have made a lot more money had I had a bigger percentage in income stocks. Like I'm up 200% on my Amazon stocks since I bought them, and it hasn't been that long. So in, hindsight's always 2020. Do I wish I had had a higher percentage of growth stocks? Yes, but at the same time, I also am setting myself up for a potential correction. Ivanhoe says, what do you think about bank stocks and what do you look for in a bank? Well, I love bank stocks, but I play options on CIBC stocks occasionally. But I actually there's a couple of mutual fund companies. One of them I've mentioned quite a few times, BK.to. And I'm just going to pull it up right now because it's so great. But BK is the ticker, .to. And they are a company that invests in Canadian banks. So the stock price right now is $12.48, but they pay a 10.5% dividend yield. So not only are you investing in the banks themselves, but what the company does is they actually purchase the stocks and they trade them on your behalf, and then they sell covered calls on the stocks that they own. So they get a yield boost on, they're collecting the dividends from the bank stocks that they own, and then because they sell the covered calls, they make even more money. And so they can continue to afford to pay out this ridiculously high 10% yield. So I would look for a stock like that rather than purchasing bank stocks directly. That said, my mom's portfolio has bank stocks that she has had for a long time. We definitely are not selling those, and I play options on CIBC. I often use a put selling strategy when the price is right. So especially if we see the price of a stock like CIBC drop, say it's around down to $110, then I would probably put in a put position for like $109, hoping that it's going to go back up relatively quickly, and that I will be able to buy out that put option and keep the profit. Stefan says, you always say, let's get rich. When can you say someone is rich? What amount is rich for you? Well, I think that's a personal question. Like what, let's get rich. It's funny. It just rolls off the tongue really well. Let's get rich. Because rich is like one of those words. I don't even know what to say about that. I prefer using the word wealthy actually, but rich just sounds like big and glamorous. But how much? It's definitely not $1 million anymore. Like, I thought when I was a kid, I was like, oh, well, when I hit the $1 million mark, when I'm like worth $1 million and I'm a millionaire, I'm going to be driving a Lamborghini or something. And that's not true. I still live in a relatively small apartment, and I still work day to day. And the $1 million is not rich. I mean, $1 million in total net worth I'm talking about, like your house included. And that's part of the reason, like house prices in Canada especially have gone up so much. So I don't know. Rich is when I don't have to work anymore, when I get up and I can do exactly what I want every single day. But I think that word is kind of all encompassing. I think that the richness in life is not just about money. We also have to think about things like friends and family and what our life is. And that's one of the things that I would really like to encourage people to do with their investing, is to get on and put that money aside for their future self so that they have somewhere to grow. And by looking at our finances, it actually makes us feel really good when we can see that growth. And that's the kind of richness and value that I would like to impart on people, not just a dollar value. Elzoro says, I believe we are switching to a renewable energy economy, some continents faster than others. Do you believe it is good to do a small investment in renewable energy for the long term? Yes, in specific companies. Like I used to trade Solar City before Tesla bought it because I thought that was so great what Elon Musk is doing. I have a bit of a hard time with Tesla in general, and I don't own any positions in it. And part of the reason is that he's a fantastic man. I mean, he's changing the world literally with what he's doing with renewable resources and with transportation and space technology. But I just want to make sure that as a shareholder that I'm putting my money towards things that are going to increase in future value. And I have a concern that Tesla may, someday bite off more than they can chew. And I don't know if it's the right company for me. But from Solar City's perspective, the way that they're putting out solar panels and then allowing the companies that are housing those solar panels to actually use the energy is fantastic. I love that kind of thing. I'm trying to recall. I had a renewable tidal wind solar company that was Canadian investment a couple years ago, and I actually I got rid of it because they started to do too much wind investing, and wind investing is one of those renewable resources that actually is quite problematic. So for me personally, I would be looking at like tidal. I know it's a quite expensive renewable energy, but I would try to invest in a company that was looking towards tidal energy because it has the least detriment to the globe, to the earth, because like wind is relatively noisy for the energy that it produces, and then solar is bad for the environment in the process of creating the solar panels. So tidal is the thing that I would be looking for. And if you find a good company that's investing in the future in tidal, I would be interested in investing in that, especially if they pay a little dividend. And Elzoro is saying, let us know when you create the Patreon channel. I definitely will. As I spoke about before, if you guys are just joining, I see I have a few more people watching. I am going to be doing a Patreon channel, and it'll be under Drawbridge Finance. And I think I'm going to keep it relatively low. It'll be like a couple bucks a month, and you can be a Patreon member, which would help me out because it helps me have the income to be able to create these videos. And then I will be posting on there when I make my trade. So I will be saying, well, this is what I purchased and this is what I sold, and especially with my options trades. So if you guys are interested in getting into options and you want to see exactly what I'm doing, you'll be able to see that on the Patreon account. So that's going to be awesome. And I would appreciate the support. I mean, it would be fantastic if I could make a couple more dollars every month for doing this. And that's not what this channel is about. I'm not trying to make a living off of this channel, but the reason that I have the channel is to make everybody more informed and to have conversations, because I like talking about finances. And I found that when I did start talking about it, that I get a lot of positive feedback, and that's really what this is about creating, again, I'm going to use the word rich, but a richness in my life so that I feel like I'm making an impact on something that I know and have been doing for a long time. So BR Investing says, are Canadian banks as safe as they are said to be? Last recession, Canadian banks were on top level within a few months. Other YouTubers from Canada seem worried. Well, as you guys know, especially if any of you are trying to do option trading, the banks charge extremely high fees to their customers. So looking at it strictly from a math standpoint, banks don't pay their employees very well. There's not a lot of perks. They're cutting out employees all the time. We're going to this like online banking and digital checks and ATM. In fact, I was just in a branch the other day in New Westminster, and it doesn't even have any tellers anymore. So completely tellerless banking. And yet the profit goes up and up and up. And the mortgages are not over leveraged. We have kept our mortgage terms quite low in Canada, so we don't have that same exposure that the Americans had that led to the 2008-2009 crash. So I am not very concerned about Canadian banks personally, but at the same time, I don't have 100% of my portfolio in Canadian banks. So are they going to go to zero? Not likely. If they lost 25% of their value and I had 20% of my portfolio in the financial sector, then what? I've lost 5% of my. Sorry, that's probably bad math, but I don't expect that they're going to go to zero. I'm not going to lose 20% of my portfolio, that part of my diversification. So I feel fairly confident, but I'm not overextended. If I was sitting here and I only owned bank stocks, I would be more concerned about that, but I'm less concerned because of diversification. Stefan says, I asked because I read that people still consider 6 million to be rich. Sorry, didn't want to create a bad situation. 6 million. I have never heard that. I don't think that there's a number for anybody for richness. It's whatever you think. But 6 million, Jesus, that's way more money than I need. Like if I have $1 million, say I had $1 million investment account, that would generate $70,000 a year just in dividends at a 7% return. So if I could live on $70,000, which I definitely could, including travel, I would feel pretty rich. I wouldn't have to work another day in my life if I had $1 million in a single investment account that was returning $70,000. So that's almost, 6 million seems ridiculous. Like who needs to have an income of 6 times 7? Let's see how bad at math I am. So, $420,000 a year you could make off of a 7% return. That's like super rich. Okay, from BR comment, Canadian banks did much better in 2007, 2009 than banks in the US and Europe. I think this is due to strict laws. Yes, Elzoro, I agree. And I just spoke about this, but the banks have very, very strict laws and they're very, very tight with their money. They don't lend to people that can't afford it. And in fact, we've got new mortgage regulations that are coming up. They've got these like mortgage tests that they do. So when you go to apply for a mortgage, they look at your income and they see whether or not you can actually sustain that mortgage. As mortgage rates go up, there will be less and less people that qualify for refinancing. BR investing, I know, but people seem very fearful of them right now. I own BNS in Canada. BNS, BNS. I'm just looking up this ticker, BNS. Bank of Nova Scotia. Wow, that's so bad that I didn't know that. Again, I don't often search for or own bank stocks directly, but let me just quickly look at Bank of Nova Scotia on the American side. It's got a 4.28% payout ratio, dividend yield, and that's right in line with other Canadian banks. I think CIBC's is right around 4% as well, 3.8 or something like that, and RBC's right in that range as well. So they're at $57, and I would assume this chart, if I look at it, is like a nice upward straight line with a few little corrections. And sure enough, in 2008, we saw this deep valley in the chart, and then, but overall, if we look at like the 200-day moving average, it's being slow to load probably because I'm doing this video stream, but it's a nice slopey line up. If we look, it's kind of flat over the last 2 years. Definitely looks like a good valuation right now. If you wanted to get in, it's well below the 20-day moving average. I don't know if there's been some bad moves, but we had a big volume spike in May 29th. And so volume spike and a decreased cost, and then it's just kind of slid down from there. So that BNS, if you guys are looking to get into a specific bank stock, at a quick glance, it's a pretty good buying position, a buying opportunity. Brian says, do you have a video on how to look through the balance sheet and determine the health of a company? I do not have a video on that. I'm always leery to do that kind of video, to be honest, because everybody can read these balance sheets in different ways. So I doubt that I'm going to be doing that. There's things that I look for that, like cash flow obviously is one thing, and like your debt ratio, but it's so hard to say. And I don't really want to be in a position where I'm doing those types of videos where I'm constantly like looking at balance sheets and then having just a bunch of people tell me that I read it wrong, because it's such an opinion on how to read a balance sheet. So I'm probably not going to do that. Alzaro said, I just started watching your videos yesterday. I'm already hooked. Thanks for sharing this info with us. I feel banks and investment firms do not care about us. Absolutely, they don't. Most. I have a broker that I still use. I've been with since I was 23. He's now 70 something. And sometimes I feel like he doesn't care about me. But for the most part, I think he does. He's always acted in my best interest. And you can really tell a lot from somebody when you put them into a position, or when you ask them a specific question and they make a choice that makes you money and not them money. And that's like one of the things about financial advisors is I always look for people that aren't trying to sell me something, and I want people to be really straight up with me, like, which is why people are going, in general, the population is going more and more to self-directed trading because they can't trust people. And it's the same when I go to a mechanic. It's hard for me to trust that they're actually fixing something and charging me for it, or are they just doing it because they can make some money off of me. And it's why I have such a hard time with mutual funds, because I can't trust that the mutual fund price isn't being manipulated on top of the ridiculously high MER that's being charged. And then mutual fund companies or managers actually buy other mutual funds within the mutual fund. And so then are they getting a cut inside of the mutual fund as well? And so the transparency is just not there. And so trusting definitely has a lot to do with transparency, which is at the forefront now, but still, even with that, it's still not very transparent, because if we buy a mutual fund or an ETF, we cannot see the individual portion of what money specifically is going to fees and what money is going into the stock valuation. So in order for me to trust somebody completely, I need to know every single transaction. And that's one of the nice things about being with a personal investor that is purchasing stocks on your behalf and charging you per trade. So although I have to pay him $100 to make that trade, I get that recommendation that's personal for me, and it's timely. It's for that specific date and time. That's what I'm paying for it. I'm making this transaction and I'm giving him $100. I own the shares directly, and I can go on Yahoo and look at that share price and know how much money I have made or lost. The dividend that pays out, I can see that in Yahoo Finance, and I can see that transaction go into my account. So there's absolute transparency when you're talking about individual stocks. As soon as you get into ETFs and mutual funds, there's such a gray area that it is easy not to trust somebody. BR Investing says, for me as a European, it's late. Have a great further session, people. Going to sleep. Oh, thanks, BR. Maybe I'll try to do these a little bit earlier for you Europeans. Thank you very much for joining. David said, just wanted to say thanks for your videos. You got me into dividend stocks, and so far, so good. Any tips on how to get started with options trading? Well, yes, I'm going to be doing more videos, so please keep watching. I just filmed one. I'm going to edit it as soon as we stop going live here. I'm going to edit it. Hopefully, I'll post that tomorrow morning. So if you guys are already subscribers, make sure you turn on your notification bell so that you get the updates when my videos come out, because I'm going to be doing some more specific option trading videos that are timed with the market. And then eventually we're going to be moving into the Patreon situation, which I talked about earlier, where my Patreon subscribers will be able to see my trades the day that I do them. And the type of option trading that I do is not super fast. I know that some people are like buying and selling options on the same day, and you can definitely do that. Like, I mean, oftentimes I am purchasing or selling an option that is up 30 or 40, 50% of its cost in a single day. So they do move really, really quickly. Generally speaking, I don't do that type of trading. I sell an option and I have like a 45-day window to get out of that position to buy it out. So it would be great for people to look at the type of trading that I'm doing, because it doesn't require you to be glued to your computer to be watching the market all day. I'm not one of those sniper traders. I don't enjoy that very much. It stresses me out way too much. I like to put on a trade and know that, if I look at it a week from now, it's pretty, I have a good idea of where it's going to be. If it does move, I do have to watch it. I watch it every day so that if it does move a large amount, I have time to react. So it does require a little bit of maintenance, but definitely not, I do not sit at my computer 8 hours a day like some option traders. And some of those packages out there are ridiculous. Like, people charge $450 a month to watch like live trades. I know I subscribed to Tasty Trade for a month and wasn't even getting all of the feed because I was in Canada. And by the time it was all said and done, I think it cost me like $280 Canadian to have 30 days worth of transactions. And it wasn't even enough information. I could see only the trades. I couldn't actually see if this was like a new position or an old position or a maintenance or a correction. And I definitely am going to set up my Patreon account in a different way than that. I'm going to have it so that everybody knows this is a brand new position that I've entered, and this is or I'm closing this position, or I'm managing this position. And that's kind of how the Patreon's going to work. So that's going to be pretty great. But obviously I'm going to be doing more options trading videos just in the theory portion as well. So that will help everybody. Alzoro says, your live streaming makes you a good person. You want to educate and help people. I like and appreciate it. Thank you, and good evening from Toronto. Oh, well, that's awesome. Thank you, Alzoro. And Ryan says, cool, thanks. Ryan says, sorry if it was an awkward question. Oh, no, not at all. There's no bad questions. Stefan says, are you using 45 days options always? No, I am not. Sometimes it depends on when I buy them out. Typically when I get into a position, I found that the most money I can make is around that 6-week mark, so around 45 days. And these are not 45 trading days. This is 45 calendar days. So when I enter a position, about 6 weeks seem to be the optimal for me. And we know with time decay, if the stock is in the right place and doesn't move very much, there's almost no time decay in the last week of that trade. So on a 6-week trade or 45 days, I typically want to be out of it about halfway through that. So I sell 6 weeks before expiration, and then I buy it out 20 to 30 days into that cycle. So when there's like 14 days left-ish, 14 to 20 days left. And the reason that I do that is because I can actually increase the amount of money that I'm making. Let's just say that if I put on, if I sell a position and I'm going to make $100 over 45 days, but after 22 days, I've already made $60 off of that trade, then I can close it and open another position 45 days out on the next cycle and make another $100 over that 45 days. And what that does is if you do that 22 days and then do it again 22 days, you've now made $60 in the first 22 days and then $60 in the second 22 days. So you took a $100 trade and you made a 60 plus 60 is 120. And that's typically how the options work. That gets thrown to the wind a lot with fees. Because the fees are $10 per trade, if I'm going to make a $100 profit on a position, it costs me $10 to get in and $10 to get out, then that's 20% of my total profit. So sometimes it makes more sense for me to ride it out. Also talking about options, I don't always do 45 days. Sometimes I do only 30 days. So I'll do like a monthly trade, especially if something's expired and I just want to get into the position again. There's some stocks that I play every single month and just adjust my range. So I have kind of like my call at the upper level and my put, and I put it a month out, I sell it, and then the next month I sell it again. And that range doesn't change very much. And I just collect a little bit of income. So creating regular income stream on top of my dividends or with them. Anyways, I said I was going to do this live stream for an hour. It has already been an hour and a half, an hour and 29 minutes. I appreciate you guys so much. Thank you very much for joining me. Please leave a comment on the video. I think you're going to be able to do that once I've finished with this. And I'm going to wrap it up here. And Ryan has one more question about FTN. Do you know how they decide if they extend it? You know what? I don't actually know about FTN. I am not very sure about how they decide to extend it. Stockrider says, have any of your stocks over the years merged with other companies, and what impact has it had over the long term? Recent example, AT&T and Time Warner. Hey, thanks guys. See you very soon. Have any of my stocks merged? Yes, definitely. The stocks have merged, and generally speaking, I get out of the positions either once they announce it or later once I've actually received the new shares of the new company. I almost always am in a position where I want to get rid of it. And that's just kind of how it works. The company that takes over, it just doesn't feel as good for me, or doesn't have quite the same balance sheet that the other company had. A lot of times I'm purchasing companies that have good growth ratios, so other bigger companies want to gobble them up anyway. So it does happen over time. I've got another question. Hi, Levi. How it works with U.S. stocks and taxation? Can you buy U.S. stocks through a Canadian TFSA? What about U.S. taxes? Yes, you can buy U.S. stocks in a TFSA. There's a withholding tax in your TFSA, and when we own U.S. stocks, they pay a dividend. Before that dividend even gets to our TFSA account, we pay a 15% withholding tax that stays in the United States. So that is something definitely to consider. I prefer for the U.S. dividend stocks to hold them in my RSP, and in my TFSA, I try to keep only Canadian dividend paying stocks, just because of that 15% taxation that happens. And I'm not a financial advisor. You should definitely talk to somebody. This is for Tubby133 about U.S. taxes, because that is part of our overall tax planning strategy. And you need to be informed with somebody that is a professional that can guide you through what is going to cost you in the long run taxation wise for having U.S. companies, especially on the date of death. I know that depending on U.S. companies that you own and how much the valuation is, that your estate can get taxed quite heavily. So that is definitely a question for your financial planner, your certified financial planner. Anyways, thank you very much, guys. Let's get rich together. I'm going to log off now. See you very, very soon.